Good morning, traders. Paul here with GammaEdge. Today is Tuesday, the 12th of July. Let's get started. Please pause your player, read this. It's important to you. It's important to us. If you agree, hit the play button. The market model via our cumulative tick is showing some pressure here. So just recapping, over here we had a short-term initial entry signal. Typically when this faster moving average, the red one, starts trending up is a good signal. We've extensively back-tested this. When it crosses above the slowest moving average of what we call the ribbon historical moving average of all the cumulative ticks, that's a really good signal to make sure you're on the long side and closing those short positions. And watching for that continuation. Yesterday, though, we had a test. It's just coincidental that it bounced off the upper cyan line, and then we failed here at circle 3. This is this failure of this second entry signal. So we're still on that first entry signal. We would still keep playing the long side, but we would be watching very, very carefully here for a break to the lower side here. We want to close our longs if that occurs and potentially look at going short. Paper trading, of course, but play this as you see fit, knowing, of course, that we could see some weakness here if the trend continues. Taking a look at the index conditions across the board, we're seeing short-term puts being added and short-term calls being removed, and you can see that here with the up arrow on the left side, which is short-term negative gamma or the put gamma, and the down arrow here on the right side, which is the short-term call gamma. See that for the SPX, the SPY, the Qs, and of course there's no demand over here for IWM on the call side, but we are seeing downside protection go in on the put side. Across the board, downside protection doesn't mean we can't go down. It means if we do go down, it'll probably be in a controlled fashion as we go deeper and deeper and deeper into the money. These people will start monetizing, and that actually can pull us out of the abyss. Volatility, seeing what you would expect to see. Actually, we're seeing a reduction in the puts, and we're seeing an increase in the calls. This is the same story we've been watching here, although we did see for October a fairly significant closure. And you can see here on the put side, we are seeing some relative short-term additions here. A little contrasty to what we have over here, but the OI does not lie. Taking a look at the SPX and the SPY here, scale is important. These do auto scale, so make sure your eye checks to see just where the divisions are. And you can see here on the put side, we're at 1,000K boundary, whereas over here we're on the 50K boundary. Why this is important, you can see short-term puts being added, short-term calls being added, but you can see the magnitude of the downside puts is going in at a larger rate than the calls. This is consistent with what we're seeing on the wing charts, so we got some good confirmation there. Same thing here on the SPY, same thing here on the Qs, and over here on IWM, same thing. Taking a look at the SPX structure into today, we're seeing a mixed picture. When we see that mixed picture, we've been either going up or down. Actually, into yesterday, we had been rising for several days on what we call the true gamma zeros and the true delta zeros. These are price invariant levels in the SPX structure. They do not react to spot price where you see this. They do react completely to how the options are trading and the DTE and risk-free rates of those options and volatility, of course. What we're seeing here is the spot prices within these areas. You can see that positive trends, which is an area we define above this, is net positive gamma, and negative trends below this area is net negative gamma. We're right in the middle of those two ranges. We're also more or less trapped right in these zeros. There's very little pressure here from the dealers, so any winds that blow from the 0 and 1 DTEs, any market news that comes in could potentially move us around, but you can see we're fairly well trapped within these zeros. That means more of the same. I don't see any impetus that's going to pull us out of here on Tuesday. Taking a look at the key levels for today, you can scan down the list here. You can see the 4005, which is the JPM hedge, is rearing its head. You can see COI is up here for the SPX. Again, this is the PM settled over here. And if we take a look at the SPX, we've got a restacking of positive gamma, the call open interest and put open interest here at 4,000. Extremely large magnitude. It's going to be very, very difficult to adjust through that. To the downside, you can see where the key levels are. 3,700 still remains as the key downside target if we were to move south. Taking a look here at the 0DTE, fairly weak in magnitude in general. It is positive. You can see we parked last night right here at this transition, fairly significant transition. It's not a surprise that we're at this 3850, 3855 zone. To the north, 3900 you can see is a fairly dominant level. Down here at 3850 is the primary dominant, but there's another one sitting right below it, just slightly of less magnitude down here at 3800. If we do move down, I would not be surprised at all that if we were to park in this particular area, if we do push north, I can see a double stacking up here. This typically shows there's not going to be much pressure above 3920, 3925, and we could potentially stall above this area. So just be aware of that. This is on the 0DTE. The 1DTE, which is tomorrow, Wednesday, is kind of interesting. You can see we're in this area that I call the transition zone. To the north is this 3950. You can see this tight grouping here, 4,000 up here. You can see that we've got call open interest expiry for tomorrow, 4,000 there. Not a lot going on between this 3950 and 4,000. It would not surprise me if we did see a push north, and if we do see that push, we could potentially go into this area by tomorrow close of business. Well, of course, this could change overnight, so we'll just have to wait and see what tomorrow morning looks like. To the downside, common theme, 3,800 on the expiry for tomorrow. Note the structure for the delta notionals are just terrible looking, and we're in a negative gamma below that 3850, 3845 all the way on down. Taking a look at the SPX as a broad construct here, this is both the AM and the PM. Negative gamma. This is growing over here at circle 2. We've grown a fairly significant amount that results due to the addition of short-term puts being added to the complex. This number has gone up down here, 27-28% compared to 24-25 yesterday. So we've got a lot still rolling over by Friday. This 4,000 level is dominant. Be very, very wary of any push here. I don't think we're going to be able to adjust through this. This magnitude is very significant. It has gone from about 50 billion notional negative yesterday, now back up to 76. This is the levels that we saw last week. I don't see us moving aggressively through this, especially with this JPM leg sitting out here. Down here, you can see we've got a few transition points that I've called out with the blue arrows. The range here is between the bars, and we're in a negative gamma condition all the way on down. Ignore this 324. It's not really relevant given the magnitudes on the other side of it. The key to take away here is we've got to get up into this zone if we have any chance of the bulls winning. If we continue to play in this zero pressure, zero region, we could be noisy, and if we get trapped and start getting pulled down to 3,800, and if we lose 3,800, you can see that we're in some pretty significant levels down here. Although the delta down here is not negative, it is positive. I do think we're going to basically be in this directionless, move up, move down, noisy, choppy area for at least the rest of the week or into at least Thursday. We'll just see where we go. Taking a look at the SPX structure, we are here at 3854. You can see where that is. I want everyone to pay attention to this. We've had a huge growth of this 4,000. 4,100 came down, so that's fairly significant to see this huge growth here compared to yesterday. We've also seen here at 3875 grow a significant amount. So a lot of calls going in at those areas. Here's the JPM leg at 4,005, 3,900 is still negative. Still a very ugly structure. If we can get up into here, I have hope for the bulls to actually start making a run at 4,000. If we can't get up in here, there's just too much adjustment that has to occur through here. To the downside, 38, 37, 36, you can see the magnitudes. They've actually grown negative. Now, part of that is price has fallen, and so of course gamma is going to increase as we drop. But we've also seen a lot of puts being added, and that's given the contribution that we're seeing here. Finally, just wrapping everything up, the too long didn't read. So the market model has slipped. All right, we talked about that at the beginning. There is a failure to advance in the cumulative tick. We want to pay attention to that. We are still on a bull signal, but it's weaker, much, much weaker. The wing charts are all showing downside protections being added. Remember, a well-protected market doesn't collapse, but it certainly could fall. Zeros are mixed, giving us a mixed picture there. Some are going up, some are going down. Both on the deltas and the zero or the gamma side. The growth of the SPX 4000 strike is remarkable from our perspective, and we think is a true wall. We're not going to be able to get over that. Certainly not today and tomorrow. It's just inconceivable to me. Obviously, your crystal ball is as good as mine, but I don't think it's going to occur. Longer term, we are still long-term bearish. Shorter term, it's weaker on the market model, so play accordingly. If you have profits, you might want to think of taking them. I took a lot of my long profits yesterday, leaving my short hedges on. The index wing charts are showing downside protection, as we said. The zeros are mixed, as I said. The VIX is showing calls are being added and puts are being closed. Just pay attention to that. I think that's some positioning going on there that we want to watch. Today is the last trading day for tomorrow's expiry. It is not the monthly. The monthly is next week, so that it could have a little bit of fireworks going on here. The overhead structure at 4,000, like I said, is remarkable, and although we could push above this level this week, if we can overcome the call leg, that 75 or 73 billion negative net notional is going to be really, really difficult. So that's it for today. If you like today's content, come join us at GammaEdge.us. That'll take you to a sign-up page for the Discord only right now. We are building a web, but it's going to take a little bit of time. Follow us on Twitter at GammaEdges with an S. We crossed 1,000 followers yesterday. I want to thank everyone for that support. And here on YouTube, if you like today's content, smash that like button, please, and follow us so that you can get notified next time we post something. So with that, I bid you farewell. We will see you in the Discord. Thanks, everyone.